And we're here at the PDAC Mining SAPS 2016. I got another special guest as usual, Jayant, the regular, on his feedback and his analysis on Indian gold demand. Jayant, how you doing?
I'm great. Thanks for having me here, Sunny.
You're very welcome, very welcome. Thanks for being on the show. So basically, let's start off with, I've named this segment, again, India, the temple of gold. It just seems they just keep consuming gold like no tomorrow. They were one of the top gold consumers for 2015. It looks like they were demand was up to 6% at 890 tons. The imports rose by 10% to 905 tons. Record high consumption of jewelry was 703 tons. Can this continue given that recently the government just announced new regulation to decrease the imports of gold and consumption of gold overall?
Sure. I mean, the government of India can't really stop consumption of gold in that country because the legal structure does it, that is smuggling actually, it results into smuggling picking up. So India still continues to consume, and it will actually increase its consumption the more Indian government tries to restrict the sale of gold in the country. Remember, it's an extremely corrupt country. You can give bribes and pretty much get anything done. So Indian government cannot stop consumption of gold. This is all just fooling the gullible people, nothing else.
And just to mention some of the tools that they've used the gold bond schemes, they're regulating gold exchanges, they're auctioning off Indian gold mines even to curb the imports, hiking import duties, encouraging a lot of Indian temples even. They have a large hoard of gold in the temples. They're trying to get them to monetize their gold through the gold bond schemes with the Indian banks and the central bank. But it seems like, ever since they've introduced all these tools, you've seen nothing more than a trickle of gold going into these programs.
It's the numbers. The numbers are crazy. So government of India announced that they had got 900 kilograms of gold accumulated so far.
That's right.
Now remember, India imports about 4 times gold every single day. So this is not even a trickle. This is nothing.
Exactly.
But 900 kilograms sounds good in a press release, but this is close to zero compared to what actually India has and what India imports. But again, gullible people fall for it. A normal Indian will continue to buy and keep his gold with himself because he does not trust his government.
Interesting. Okay, so let's move on to China now. So, I mean, you were recently in China and India as well, and I'll ask you about your experience there, but I just want to mention just a few facts before we go into your experience there and how you felt. Basically, overall you're very bullish on China. I know that we've received a lot of your market commentary on that, but we've seen China's growth. It's not really slow, but growing at a slower rate. It achieved 6.9% in 2015 instead of the 7.8% that was projected. But you had a recent article that talked about it in terms of dollar terms, in terms of the GDP. So, for example, China's GDP was $12.25 trillion versus India's GDP of $2.18 trillion. And the banking system has grown 1,000% over the last 10 years. They've had liquid assets of $34.5 trillion, and they have around $3.3 trillion of FX reserves. So will they continue to invest in gold given all these factors?
Well, I think China continues to grow, and it is certainly growing. When people say China is slowing, that's a wrong usage of the word slowing. China might be growing at a slower pace, but it is still growing, it's not slowing. So people have to define words properly. Now, Chinese growth of 6% is still a fabulous growth, except that we have become so accustomed to a very high rate of growth coming out of China that 6% sounds very little growth about China.
And India's growth is 7.6%. That's what they're forecasting for the end of the year. They've upped it, based on certain variables. But yeah, so go ahead.
It makes no sense, Sunny, to put forth percentage growth rate, which is what most people do. 6% growth rate of China translates into more than $500 per person per Chinese in terms of growth rate.
Right.
India's growth rate of 7.5% translate into just about $120 per person.
Wow.
In India. So these are not comparable numbers. They should be using growth rate in absolute terms rather than in percentage terms, because these are not comparable. And China is still growing at a much higher growth rate than India is.
Interesting. So just to mention a couple more numbers from the China Gold Association, China consumed 986 tons of gold in 2015, which is up 3.7% year over year. And the reserves stand at 1,762 tons. That's a lot of gold. So going forward, I mean, out of your trip that you went there, what was the experience like? I mean, you've been there several years, but did you notice anything in particular, or was it just still, things are still good? Well,
just based on anecdotal experience, I think Chinese continue to be interested in gold. They will continue to buy gold. Because remember, while economy can continue to grow, the individual might not have a proper place to keep his money.
That's correct. Yes.
So as an end result, despite growth in the economy, he might not see growth in the stock market. So as a result, he will very likely continue to invest in properties. And I know people are very suspicious about properties in China, but I think he will continue to invest in properties and he will continue to invest in gold, because the individual in those countries just does not find a good place to invest his money.
You're seeing a lot of the Chinese population immigrate out of China, and if there's a slower growth rate, does this mean that, they have less disposable income? So why would they want to invest in gold and not go and purchase like real estate or something like that? So is that something that is a factor as well, or?
Well, Chinese have a population of about 1.35 billion people, and they have only in the recent past started to move their money outside China, and it is only in the recent past that Chinese have started to move out of China. And this is a sane strategy for any society. Every society everyone should diversify and everyone should move out. And that's the right thing to do. And Chinese moving out is a great thing for China, because these people then enable transfer of technology from the West to China. Chinese are behind a lot of growth taking place in Africa. I go to Africa a couple of times a year, and you go pretty much anywhere in Africa and you see businesses, mom and pop shows and infrastructure being run and managed by Chinese. So Chinese have been a catalyst for growth, not only in China, but around the world.
Interesting. So, the People's Bank of China actually added 580,000 ounces of gold to their official gold reserves, which stands at around 57 million ounces of gold now. Let's talk about the gold price recently. We've seen a very, very healthy, very positive, very strong uptick in the last 2-3 weeks, from around the $1,100 level now to around $1,270, which we reached on Friday. Is this a deterrent to invest in gold, even though the prices with the Chinese say, it's not cheap anymore. I want to wait a bit more, wait for a little retraction and invest again.
Well, Chinese and Indians are value investors. They look for drop in prices before they buy. But the reality of today is that the world is facing a negative yielding environment where the Western countries are facing negative yields almost for the first time, and countries outside the West, and I think excluding China and a couple of other smaller countries, negative yields are becoming common again. Those economies are stagnating, and in a stagnant environment, people have no choice but to invest in gold. So they will push the price up eventually. It will be very volatile in the short term, because it has gone up quite a bit in perception of those people who are trend follower. But eventually gold has a place to protect your money, and I think it will become extremely important going forward. Gold and silver.
Interesting. So what we'll look forward to now, I guess, is with Chinese New Year just wrapping up, we'll see what the gold numbers out are from there. Any last thoughts, Jayant, on?
Well, I really wished that economies were not so badly regulated as the economies are. The regulations are very oppressive for business people around the world, and that is going to result into increase in price of gold.
Right.
I wish that hadn't happened, but this is what will happen because I cannot control how our institutions are run because they are decided by the masses who believe in bread and circuses rather than what is actually good for the future of our societies.
Interesting. Well, thanks, Jayant, for all your insights into India and Chinese gold demand. If you want to get in touch with Jayant, we'll leave the contact details below. You can directly contact him and ask him any questions. Jayant?
Thank you very much.
All right.
Sorry.